Good morning, fellow option traders. This is Jeff, and welcome to the daily scan for Wednesday, October 8th, 2014. All right, the review of the news yesterday, JOLTS report. It is a job opening, and some other things are thrown in there, and there are, I don't know, 4 million or something like that, 5 million job openings, which seems strange to me that there would be that many, but a lot depends on what market they're in and what kind of job they actually are, and whether they're just having problems finding qualified candidates, or if they're just trying to. What I think part of the problem might be is they are paying less, and people are taking a pass on it, at least for now. I don't know, but anyway, I can speculate all I want. Does it mean anything? I don't know. So for today, we have the FOMC meeting minutes that will come out from their recent private behind closed door meetings, and we have the EIA petroleum status report coming out, and we'll take a look at the price of oil and what's happening there in this video, and jobless claims tomorrow, the regular weekly how many people got laid off this week report. And then Friday closes out with a couple of gold stars. Nothing really big happening on the announcement front this week. Let's take a look at what is going on across the ponds. Over in Asia, we are almost 100% bearish there, a lot of red there. And in Europe, there also is a lot of red, and some of it's pretty strong. Sort of like what the market was here yesterday. This article here on MarketWatch talks about how weak the NASDAQ is, and there was, here we go, high dividend stocks. As they pick a digger, you might want to consider that if you're an investor. And bonds, why they're right and wrong. Well, bears are right and wrong, and bulls are right and wrong, I guess. And I find this interesting. Money talks, so we might be right. Then we got Ebola in Europe, so a lot of spooky things happening at this time of the year as we approach Halloween. Okay, let's jump over and take a look at the futures here. Looking slightly weak, possibly down at the open. Gold continues to claw its way back up above the 1200 mark. And oil, as I mentioned, lost $1.05 overnight, down to under $88 at $87.81, which I find to be, well, I find that pleasant, but the thing that sort of worries me a little bit is the rumor that there may be a deflationary period. It's hard to believe, as like taxes keep going up and the cost of doing business keeps going up as the government sticks its nose in more and has more regulations and more applications you need to file, and it's never free to file anything. So there's talk about deflation. And I don't know, if there'll be a big market crash and the really rich people will buy up everything then and get even richer as it recovers, and there's all that stuff flying around out there. Anyway, yesterday entered NASDAQ and Amazon, opened up trades on those. So we're all 100% negative delta, and unless something really, really juicy presents itself today, I'm going to pretty much just live with what I have here. There's a potential of, if everything works out, and they all have expirations next week, they're all 20 deltas. If it works themselves out, then it will be a nice, we'll be at a nice midpoint for the month at the regular October expiration. Okay, we can now just jump right into the A+ list, and we'll just quickly go through it and keep the video a little bit shorter today. Alright, Apple, still don't want to trade it, just not seeing anything going on there. No momentum in any direction. Here's the Amazon trade. Short is at 330. That was about a 25 delta short. I know I call it 20 delta, and I usually like to trade something a little bit above that because I look for a certain risk-reward ratio. Usually I would like to have a 5-to-1 risk to reward, but I'll take a 10-to-1, and that's usually what a delta gives you, is 10-to-1. So I like to have it fall in between the 10-to-1 to 5-to-1 risk reward, which simply stated is what we see here on the risk profile. We have 1,200, let's round it off to $1,200 at risk, and $276 is our reward. So that is, let me just run that through the old calculator. The way that it comes up for me is actually 4.3. So 4.3 to 1 risk reward. I may have calculated that wrong. It might be just a little bit too early to do that kind of stuff. But that's what I'm talking about. How much risk over here, how much can I lose, and how much can I gain? So that's what I look at. Okay, let's jump to Boeing. Back to charts here. Boeing, not sure which direction this was going. So it didn't really have a target set on this. It had a very bad day yesterday, just like last week. I think that was Wednesday. Was a bad day, and Tuesday was a bad day of this week. But anyway, I would have to say that could have missed a trade here, but we didn't really have a trend going on here, and the trade from last week that I did really was sort of risky, and it worked out well, but regardless, it was still sort of risky. Baidu, no trend here, sort of had a target down here, wasn't of great interest. Glad I did not get into it. Just really nothing going on here for Baidu for a direction in price and any sort of momentum. Now, where did this come from? I don't remember drawing this on here and all this other stuff. Anyway, Chipotle had a direction. I don't know how that ended up there. I know we were thinking about a trade here. We had a target, a pretend target up here to go bearish on it, and looks like it would have worked out. But in reality, what would I be looking for here? Well, the 50 just turned over, and so did the 20. So we're just going to stand on the sidelines on that one as well. And my alert on the spread did go off yesterday, but it was a hokey kind of an alert. Okay, so Costco has earnings today. Yeah, they have earnings today. So of course we're not going to touch that one. The Dow, let's take a look at the Dow. We definitely are looking at, on the daily chart, beautiful channel for a pullback here. And it looks like kind of a major one because we actually have 3 weeks now. Whereas recently the pullbacks have only been 2 weeks on the weekly here, but this one now is in its 3rd week. So this might be the real thing. Gold is crawling back. I like to see that. It's got quite a ways to go though before I will sell another call against that. We got Google. Ooh, big down bar on Google, and we have earnings next week, so we're not interested in that. LinkedIn. Too much price consolidation here. I know it was on my list. I'm just going to have to wait for the next opportunity, so I'm just going to slide this over and wait for the next one. NDX. As if we are really going to go into a long correction period or huge pullback or a crash or whatever you might want to call it, we'll be looking for hopefully more 50 deltas will start rearing their beautiful little heads and give us opportunities for huge profits as it goes down. But as long as it's trying to sort of make up its mind what it wants to do here, we'll just be patient with the 20 deltas. Here is NDX. The short is at 40.60. I didn't put the amount of credit down here. Hang on. There we go. With us $1.40 credit on that one. I believe it's probably a $5 spread. We just do a quick look on the Analyze tab. Yeah, it's a $5 spread. So that is better than a 5-to-1 risk reward as well. Dollar would be a perfect 5-to-1 risk reward. So we got $1 gained with $500 of risk. But actually, it's a little bit better than that because you say that you made $1, so really you only have $400 or $4 at risk. So you could look at it that way. But I like to do worst case. Alright, so that's where NDX is. Netflix. We have earnings next week, so we're just going to ignore that one. Priceline. We are in Priceline. This is 55 cents. This is a $2.50 risk reward. Spread. So that is a little bit better than 5-to-1 risk reward on this 20 delta play here. And everything's working out really good right now. The Russell. This is $1.40 on a $5 spread as well, working out well. SPX, like I mentioned, I could have gotten into this yesterday, but when I got too heavy into the cash indexes, I got burned, so I thought I would be a little bit more careful and not overextend myself. I don't want to put too much of my account at risk. So I have to limit my positions. So when I look at the amount at risk, that's why the 50 deltas are better, because you put a lot less at risk. Your reward is better. Your chances of success are a little bit less, though. You are it's sort of like a 50-50 almost, but you have momentum on your side. And that's the way CSSV2 should work out. So that's why the 50 deltas are attractive, using momentum. And we might have some serious momentum to the downside going on here. SPX is also in its 3rd week of a pullback, and there have not been any 3-week pullbacks. I don't call this... Now this is a 3-week pullback here. So anyway, I didn't jump in on this yesterday. I hope you guys did. Tesla. Okay, Tesla, yeah, it actually has a little bit of a topping pattern, but we have a 50 delta target set down here for Tesla. And then last but not least, that's our only 50 delta candidate right now. Everything else is consolidating or has earnings coming up. Visa, this would have been a good play yesterday as well, especially in the morning. Whether the hook happened in the morning, I don't know. Quite possibly it did, because here on the intraday it turned over on the second candle here, which actually started at 10:48. Alright, so keep it a little bit short today. That's it for today. Thank you very much for watching. Have a great day and happy trading.